Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all in the green. Wall Street took a slowdown in the jobs market as an indication the Fed will be able to start cutting rates as early as September. S&P up 65, up 1.3%. We've got the Dow up 450, up 1.2%. NASDAQ higher now by 2%. 10-year, 4.49%. The 2-year, 4.80%. Gold down $4 the ounce to $22.99, down 0.2%. And West Texas Intermediate crude down 1.1%, $78.09 a barrel. So stocks higher after this morning's jobs report. Administration reaction from Heather Boucher, a member of the President's Council of Economic Advisors.
Well, today's report is really good news. The acting secretary talked about it. We have seen this unemployment rate below 4% for a whopping 27 months. That's the longest stretch going back over half a century.
Heather Boucher, a member of the President's Council of Economic Advisors. Amgen is soaring after its CEO said he was very encouraged by early results from a study of the company's experimental obesity drug, Maritide. Shares of Amgen, they are rallying now by 11.3%. Recapping stocks higher, very close to session highs, holding on to gains. S&P up 65, up 1.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. A rare Rolex with a split-second chronograph sold for $3.5 million at auction in Monaco recently. It's a record price for the model. Carol, collectors are still willing, peaked back in 2022.
Well, speaking of the rarefied world of luxury timepieces, is the upcoming auction of 8 watches from the collection of none other than F1 legend Michael Schumacher. Christie's is set to auction them off, Tim, in Geneva on May 13th.
We've got with us Remy Guillemot. He's head of watches in Europe and Americas at Christie's, and he joins us here in the Bloomberg Interactive Brokers studio. Welcome, Remy. How are you?
Hello, thank you so much for having me.
Well, thanks for joining us. We love talking timepieces here. First of all, everybody knows Michael Schumacher, legend in F1. How did Christie's get hold of these watches? Like, are you selling them on behalf of Michael Schumacher's family?
Yeah, well, our watch department since 2019 has had enormous growth, actually 77%. And, we've been able to kind of bring, fresh projects to the world of watchmaking and the auction industry, actually, by doing thematical auctions, an auction that was dedicated to François Paul Journe, for example. A watch that was called Legendary and Unique Watches, which was basically a single-owner collection from Jean Todt himself, who was the former team principal of Ferrari in Formula One. Other single collections, and I think, we've been able to, we've been very fortunate, to be contacted by the Schumacher family directly, and throughout the years, work with them, and in the end, they decided to place a few of their watches in our auction on May 13th in Geneva.
Let's get to the good stuff. What are these? Tell us what the timepieces are like and what's up for auction.
So actually, there's a great diversity. The auction on May 13th, it's going to be so many watches, from Patek Philippe, Rolex.
How many are being offered?
There's actually 164 watches in the auction. There are 8 watches that belong to Michael Schumacher. So of these 8 watches, you have an incredible Audemars Piguet wristwatch, which was made uniquely for him. The dial was completely personalized. You have like his helmet, a Ferrari logo on the dial. Cool. Incredible watch. The watch was gifted actually by Jean Todt to Michael to commemorate one of his driving championships. So, he won 7, so that was for the 6th. There's also a great François Paul Journe wristwatch, Vagabondage wristwatch. Again, one of the iconic watches of François Paul Journe. It's completely unique and made for Michael, again, with great personalizations. So.
Well, what's the market like for something where it's unique, one of a kind, Remy? And I am curious, when you talk about these watches, what's the expectation of how much they might go for? Yeah,
well, actually, the market for exceptional watches is really good, it's extremely strong, because we're in a place in the market, which, we're in the secondary market, but we're in the niche part of the secondary market, in the sense that we're selling watches that you cannot find anywhere else, right? So there's always demand, for these timepieces, and, we're really ideally placed. With regards to a prognostic, for like an idea of value, what we know so far is that we've had great interest, from Americas, from Europe, Asia, the Middle East for these timepieces. The fact that they have belonged to someone so iconic, and which is Michael Schumacher, and arguably the best Formula One driver, to ever be in the sport, it makes it a bit tricky to tell you exactly, to the dollar,
come
what the
on,
amount
you
will
guys
be.
are smart. You must have an
Yeah,
idea.
but
But
they
we're
would.
talking like 200,000.
Or millions.
For
We're talking
example,
millions,
For
right?
example, the Audemars Piguet wristwatch,
Yeah.
the estimate is 150,000 starting bid.
Right.
Okay.
Being the watch that it is, like we expect that it will be around 400, 500,000.
Oh, okay.
But it could be more due to the
Okay.
fact that the watch actually, and a few watches in the Michael Schumacher collection, speak to both people who enjoy Formula One, who enjoy watches as well, because
Right.
the watches themselves are actually great. Taking everything's considered, to buy a unique wristwatch from Audemars Piguet, that was made by Audemars Piguet, it's already something truly special. But to have something that is unique from one of the greatest manufacturers of all time, that has belonged to one of the greatest Formula One drivers of all time, it's really great.
We've been doing a lot of reporting here at Bloomberg, our pursuits team, about the secondhand watch market that has been softening. So celebrity-owned watches still remaining strong at auction?
Yeah, because it's such a rare occurrence,
Yeah.
And it's true that, watches in the secondary market, some watches have been softening, but I think these are for the more commercial part of the secondary market, watches that are rare, but are still being produced, for example. And what we've been able to see in the past years, during COVID, for example, is that there was a scarcity in supply by the watch manufacturers,
Yeah.
great demand from buyers who had excess savings or, who just had the means to acquire a timepiece, for example. And in the end, you kind of ended up in this situation where everyone wanted watches, but the watch manufacturers in the primary market could not deliver them, so they had to go to the secondary market to acquire watches, and prices went up. That being said, watches that are truly rare and truly special, for example, we're selling a great Patek Philippe from the 50s in this auction.
This one's not related to
Non-related to Michael Schumacher, but it's still, a hugely important watch. The first perpetual calendar wristwatch that was ever made by any watch manufacturer allied with a chronograph and a moon phase. It's Patek Philippe who made it. The watch is valued 2 to 4 million.
Yeah. How old is it?
It's from the 40s actually, and
Pretty
it's
cool.
only one of 12 known.
Yeah.
Okay.
So that is something
So the history, it's iconic
extremely
in that
special.
regard. Yeah.
And on top of that, when you're buying at Christie's, which is
Is that what you would call a really blue chip watch? Like, I'm curious about what
100
attributes make it something a really blue chip
100%,
Yeah.
100% blue chip item, and also there's something great. Patek Philippe, they are very well known, for their quality of
Yeah.
watchmaking, but also for the extracts they keep. So if you buy a Patek Philippe from that era, we're going to do our research, to give you, our specialist opinion on the wristwatch. On top of this, Patek Philippe are going to make extracts which give you exactly how the dial was, how the watch was born, which dial did it come with, which movement, etc.,
Right.
etc. So it gives you complete transparency.
I'm interested in the marketplace because there are a lot of places to buy and sell watches right now, especially online places. Why is a traditional auction house the best place to actually go to sell a piece?
I think that it's because, our network is great. We have offices all around the world. So, we are, for example, our auction is in Geneva, but the reality is that it's global. We'll have people, in the US that participate in the sale. We have people in Asia. We have people, from all around the world. And Christie's is an auction house since 1766. So, there's a reputational aspect, of course. There's also, a great legal framework behind it where if you buy a wristwatch, you will always be able, to know where Christie's people are in case you want to resell it one day, right? If you buy a wristwatch at Christie's, you have a warranty on authenticity, which, lasts for 5 years and of course more, because the reality is, we want people to be transacting in confidence when they buy
Right.
at Christie's. We even kind of pioneer in certain ways, to make sure that people's are very, or that clients are very at ease when they purchase or sell by, using new technology. For example, this Patek Philippe that I was mentioning, the 1518 in pink gold, which is valued $2 million, starting bid. We're offering it with, of course, we're offering it with blockchain certificate, which is made by Watch Certificate, basically. And it's a certificate which, blockchain enables you to track exactly the history of the wristwatch,
Right.
who were the previous, what was the previous ownership, provenance, etc.
Provenance.
So, and then I think to answer your question about why Christie's, it's also because of the expertise. To have a discussion with an expert who can tell you in detail what a watch is very rare and special.
I'm going to put you on the spot, 20, 25 seconds. What brands are people seeking at auction most these days? And just real quickly, one or two.
Yeah, so if I had to answer very quickly, which I will, I would say Patek Philippe, Audemars Piguet, François Paul Journe. Then you have great independent watchmakers as well. Crivia, for example, Crayon. The watch market has broadened so much now thanks to the level of passion and connoisseurship that people are interested in, more than just 2 or 3 blue chip brands. So it's
I feel like that's what our team has been reporting. Just it's the market and the options have really broadened out. Remy, thank you so much. Really
Pleasure.
fun, and we'll be looking forward to the auction results. Remy Guillemot, he is head of watches in Europe and Americas at Christie's, joining us here in studio.
Hey, let's get an update on world national news. We got Amy Morris in the Bloomberg 99 newsroom in D.C. Hey, Amy.
Hi, Tim. An indictment was unsealed today against Democratic Representative Henry Cuellar of Texas and his wife on money laundering, conspiracy, and bribery charges. The indictment says Cuellar and his wife accepted nearly $600,000 in bribes from an Azerbaijan-controlled energy company and a bank in Mexico in exchange for advancing the interests of the company and the bank in the U.S. Cuellar said in a statement that he and his wife are innocent of the allegations. They have been taken into custody. The U.S. is in talks with G7 leaders to give as much as $50 billion in aid to Ukraine, with the massive outlay being repaid with the windfall profits from sovereign Russian assets that were frozen in Europe. The U.S. is pushing to have an agreement when G7 leaders meet in Italy in June. Former Trump advisor Hope Hicks broke down on the witness stand during cross-examination during Donald Trump's criminal hush money trial. Bloomberg Law host June Grosso has the significance of Hicks on the stand.
The prosecutors love to end on a Friday with a big witness, and hopefully, I'm sure they're thinking that she won't get to cross-examination. So what the jurors have in their mind all weekend is just her testimony.
Yeah.
And and as we've said, she's different from the other witnesses who have testified before because she doesn't have the credibility, or shall we say morality problems that some of them had.
Bloomberg Law host June Grosso, and court is set to adjourn within the next half hour. Cleanup efforts continue after the end of a week-long pro-Palestinian protest encampment at UCLA. This student did not agree with people who were spraying graffiti on the campus.
I don't agree with the vandalism. Some people say it's a form of protest. Me personally, I disagree with that. I think it diminishes the argument and the message that is pushed. It upset me. It disappointed me.
The LA County Public Defender's Office says the protesters were booked into jail and cited. Most of them are due back in court in July. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
6:40 on Wall Street. We do check markets all day long here at Bloomberg Jobs Friday. Stocks on track for a second week of gains. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid today after the weaker than expected payrolls data. The Dow's currently up 452 points. S&P's gained 66, while the Nasdaq is higher by 2.1%. The U.S. 10-year yield at 4.5%. Gold is down 6. Oil trading in the red, but Bitcoin is higher by 4.3%. Among the main 11 S&P sectors, leaders were tech and materials. Only energy was in the red, and leaders to the upside in the Dow, Apple and Amgen, while Chevron fell 1% and led to the downside. Also, after earnings, Expedia fell 15%. And in other news, Argus cut Paramount to sell, saying the sales process is a fiasco. Wrapping things up, Apple gained the most since 2022 after its earnings and its record $110 billion buyback. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
TikTok, everybody. Just about 18 minutes left in today's trading session. Getting ready to wrap
And
up.
that's going to be a week.
I know. Can I just say
it.
This week has felt like 3 weeks.
And you were only here 4 days.
And I was only here for 4 days. Maybe that's why I felt like 3 weeks.
I agree with you completely.
But just like, right, some
By
of the...
Wednesday, I was like, what? How is this only
That was
Wednesday?
a Fed meeting
I
and
know,
a
it's
Fed decision, right?
I know, yeah.
And there were a lot of Apple earnings. I don't know. There's
Amazon
like
earnings
this churn.
Tuesday, jobs today. I mean, there's a lot.
Yeah, right?
Yeah, that's what it felt like.
All right, so here we are, and we're setting up for another gain for the S&P 500. That would be 2 in a row, as Abigail reminded us, after 3 down weeks for the S&P 500. We understand the trade today, as we've seen, really a rate reset along the U.S. Treasury curve after that softer than forecast jobs report.
For a drive to the close, we got with us Amy Magnotta, co-CIO at the Registered Investment Advisor at the Genos Capital. Amy joins us from Pennsylvania. Amy, how are you?
Great, thanks. How are you?
We're doing well, thanks. Hey, so how are you looking at everything that happened this week and also moving forward, given that we saw pretty much a rates reset today after that softer than expected jobs print?
Yeah, I think we had really become a little bit more cautious back in the beginning of April after really strong run in equities since November, and then investor sentiment had reached pretty elevated levels. So there was a lot of expectations, I would say, built in. So we were a little cautious coming into April, and we did see some of that, a little bit of a market correction. And as you said, I believe it's just kind of this repricing of Fed expectations for what the Fed's going to do. So a few weeks ago, it was a couple of higher than expected inflation prints, and that concerned market participants that rates would be higher for even longer. And now with the softer jobs report today, a little bit of a reset there now, thinking that we will see some rate cuts this year. And the market's pricing in, I think, 2 rate cuts, September and December. So kind of a reset of expectations, as you said.
Hey, Amy, what are the questions you're getting from some of your clients, your investment clients, and what they want to know and what they're thinking about in this environment, and where they are thinking, okay, here's where I want to be, or where I feel comfortable with exposure, here's where I don't?
Just with the strong performance we've seen in some of the large cap growth indices last year, a lot of investors are concerned about, has that run its course? And for us, we always recommend, a more diversified portfolio. Certainly, we're going to have biases and over and underweights, but we think investors should be a little bit more diversified today. I think investors are concerned about rates and what that means for their fixed income portfolios. and also just, given the strong run in equity markets, we always get, kind of, is this the top? And then as we get a little bit closer, a few months from now, I'm sure we'll be getting a lot of questions on the election and what that might mean for markets.
All right. So how are you steering them? My understanding is you like the small cap space. We know the Russell, if I look at it, the Russell 2000 is pretty flat on the year. Is that because there's more value to be had and you see more upside?
That's correct. So we like small caps here. We think valuations are very attractive relative to large caps, and then also relative to small caps' own history. But I think one important note is that we like active management in small cap right now. So we do use a blend of passive and active strategies in our portfolios that we recommend for clients. So we do like active in small cap. If you look at the Russell 2000 index, we have a very high percentage of those companies are non-earners. We want to be, we think active managers in this environment today, where there's greater dispersion, really can add value, especially in that small cap space where it's a little more inefficient.
Amy, where do you not want to be right now? What do you want to stay away from?
We have been, I would say, where our underweights are, have been on the international space. So we still own international, but we do favor the U.S. over international. And then within international, we've been underweight Europe. We favor Japan and emerging markets. And so we've been really staying away from Europe. Also in the fixed income space, we're shorter duration. So we're kind of avoiding long duration today, given certainly have a move in rates in the last few days. But we still think there's a lot of volatility there, and that long-term rates could stay a little bit higher. So we've been a little bit more flexible in fixed income and shorter duration. Plus, you're getting a nice yield on short-term securities right now.
Interesting. It's interesting. So I do also think about politics. Like you said, that later on in this year, you expect you're going to get a lot more questions from your clients. We've had a fair amount of folks that feel like come on and say it doesn't matter. Election year is usually good because candidates are out there promising everything and everybody gets pretty excited. But how are you thinking about the election, the outcome, and what it could mean potentially for financial markets and the investment environment?
I think what we typically see leading up to the election is that the incumbent president will try to promise a lot or try to get some things done in order to win some of those votes. I think it's a little bit harder in this environment to get anything done in Washington, as we know. So I think there'll be maybe less of that than we've had in previous cycles. But we have seen some things with the student loan forgiveness and other things. But I think typically the outcome does not matter. There's the volatility leading up to that, uncertainty about what proposals might make it through. But typically there's a rally post-election in the back half of that year, regardless of the outcome. It's more of a certainty. The market does not like uncertainty.
Do you see this year being any different, though? I mean, this is kind of a bizarre year.
It is, and I think if there's one year it probably could be different, it might be this one. Yeah. We also have the tax cuts expiring at the end of 2020. So I think that as we see the proposals for how that might impact, that could impact markets in the short term. We could see some volatility surrounding that, uncertainty. But typically we get that relief rally regardless. And then once that president is in office, we would see there'd be some really... You'd have to really understand the proposals and what could actually make it through Congress.
In terms of, investment cycles as they go, and it's kind of interesting, kind of some of the swings we have seen in terms of expectations from Fed policy and the outlook or the recession that was being called for so long. But when you look at the environment today, does it feel like you have more visibility? Do you feel more confident, or do you feel a bit more nervous? And just got about 30 seconds.
Yeah, we're pretty confident. I would say in 2024, low probability of a recession. As you said, people have been calling for a recession for probably the last 18 months. We think the inflation report today is soft landing-ish for sure. But I think the key thing will be inflation. And if inflation can come down the next few months, we saw wage growth was slower in the employment report. So in the last 3 months, wage growth has been about on a 2.8% annualized basis, and that's kind of more in line with the Fed target. So I think growth is still pretty solid as long as we can get inflation to come down. a little bit, and the Fed can recalibrate monetary policy. I think 2024 is pretty. We're pretty positive on that.
All right, some optimism. Hey, listen, so appreciate it. Amy Magnotta, co-CIO at the RIA Atrogenos Capital. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Paramount Global shares now down 6.9% following a Variety report that said there is an expectation among insiders of the company that the two deals it has been linked to ultimately won't proceed. Again, Paramount Global right now, PARA on the ticker, it is down by almost 7%. Apple shares now up 6.3% after earnings. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
There isn't a big case to break them up. Like, what are you going to take out and divest when it comes to Apple? So to me, it's still the DNA of the company is all hardware. And yes, they have created an ecosystem and an operating system to tie that all in. But like, you can't take any parts out of Apple and divest them.
Mandeep Singh of Bloomberg Intelligence. It has been more than 18 months since Apple last updated its iPad line, marking the longest gap in new models since Steve Jobs first unveiled the product in 2010. That drought will finally end on May 7th. That is the day that CEO Tim Cook is poised to introduce major upgrades to the iPad Pro and iPad Air, as well as new versions of the tablet's accessories. Coinbase global shares are lower now by 2.1%. after posting higher than forecast first quarter revenue and profit as a resurgence in cryptocurrency prices reawakened demand from individual investors. Big day for Amgen stock. It is up now by 11.7% after its CEO said he was very encouraged by early results from a study of the company's experimental obesity drug, Maritide. CEO Robert Bradway said, "We recognize the significant interest in obesity." And those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just about 4.5 minutes left in today's trading session. Charlie just giving you the numbers as we get you ready to count down the close here on this Friday. One of the most read stories on the Bloomberg, and we might get into this a little bit more when we check in with David Weston, because Wall Street Week is coming up at 6 p.m. Wall Street time on radio and TV. But he, as he often does, catches up with Harvard University, or former Harvard University President Larry Summers, of course, former U.S. Treasury Secretary. He's a contributor to Wall Street Week, and they definitely did talk about what's been going on college campuses.
Yeah, no, an important voice, too. Remember, he, like you said, Carol, former president of Harvard University. Mm-hmm. He renewed his criticism of college protests stemming from Israel's war against Hamas. He said that the increasingly chaotic scenes on American campuses were encouraging U.S. adversaries.
Yeah, it's interesting. He said occupied buildings, disrupted commencements plans, and scuffles with police send a terrible signal to countries such as Russia, China, Iran, and North Korea at the, quote, most dangerous geopolitical moment in decades. And he said that again to David Weston, which we can hear more about when David joins us. But, you know, I have thought about this. I've had conversations in our newsroom with some of our colleagues about, I think about other nations who are seeing our campuses right now and police going in and shutting them down. And I'm like, how this appears on a global stage, how it appears to all of us.
I was just going to say that.
Who are so used to campuses being kind of a safe spot to protest and
express
talk
oneself.
About issues. Yeah. Not necessarily agree, but then to talk about that disagreement in hopefully a civilized way.
Right. Oftentimes, I would say that the scenes of law enforcement getting involved in protests would be associated with not the United States.
Dictatorships.
You'd see that in other countries.
Yeah.
And I'm not saying that's necessarily what's happening here, but what I'm saying is it could be easy for a critic to look at, you know, some of the images and say, wait a second, does that look like the United States I know?
Well, and it gets to, you know, we've talked about this with the upcoming November presidential election. You know, for so long, the U.S. has been seen as such a stable place, democracy in place. The system works. You might not always agree with it, you know, the rule of law and so on and so forth. But then when you start to see maybe what looks like a little instability, you know, how global leaders and also global investors perhaps could look at it.
Remember, President Biden on Thursday defended the rights of demonstrators, but declared that order must prevail.
All right, folks, right now we're going to go back to the markets, heading over to our TV colleagues, counting you down on this Friday and wrapping up the week. Beyond the Bell. I love this song, by the way. It starts right now.
The Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. We're joined right now by Scarlett Fu in the TV studio, Carol Masser and Tim Stenevec in that thing we call the fishbowl. Welcome to our audiences across all of our Bloomberg platforms.
Us,
okay, and you are the two of the best looking fish I've ever seen.
Appreciate that.
Sure thing.
Got weird real fast.
I think Nemo's calling. Having said that, what an interesting week. I feel like just when we kind of have a Fed meeting and we have a certain narrative and Jay kind of plays down this idea of maybe a rate cut anytime soon, I feel like, well, wait a minute. Just give it, 48 hours, and you get, not even 48 hours, and you get a different thing when it comes to rates.
Yeah, I think a week ago we were kind of asking, okay, what's going to be the most consequential event to happen next week? Is it Apple earnings? Is it Amazon earnings? Is it Fed Chair Powell's press conference? Or is it the employment report? And I think it's easy to say today, well, with the reset that we saw in rates post the employment report, that softer than expected number, it was certainly that this morning.
Yeah, but this is one data point, right? And the Fed is data dependent, so we got to wait for CPI. We got to wait for those other inflation measures to backstop what we're getting from this latest jobs report.
But the thing is, if the Fed is data dependent, then how do we front run the Fed? So if they're data dependent, they're going to look at everything that we're looking at. How's the market going to front run like they normally do?
Therein lies the frustration.
Right. I mean, you look at the Fed's done absolutely nothing, and yet the 2-year yield's been all over the place, for example.
Yeah, well, I mean, I think you answer your own question. I mean, I think it means we're going to have a lot of volatility up ahead, and I guess the direction the market will sort that out. All right, let's walk you through the numbers here, because earlier this week, it looked like we were really heading for a down week, but all the major indices today rallying for a second straight day, and all the major indices now closing out the week on a high note. The Dow Jones Industrial Average is going to close out the day higher by about more than 400 points, or about 1.2%. That's going to be good enough for a gain of about 1% on the week. The S&P 500 up about 64 points, or 1.3%. The NASDAQ Composite up 2% on the day, or more than 300 point gain here on the day. And the Russell 2000, let's take a look at that. Not the strongest showing on the day here, only up about 1%, so lagging the rest of the sector. But I was just taking a quick look here, at least among the major indices here. That's your outperformer on a weekly basis. The Russell up about 1.7 on the week.
All right, back to the big caps I go in the S&P 500. Just a big, broad picture, guys. And 378 names in the S&P 500 actually gaining ground today. 122 to the downside, and Scarlet 3 unchanged. So more of a risk-on trade, no doubt about it.
Absolutely. That's a pretty lopsided split there in terms of gainers versus losers. Let's take a look at the IMAP, which shows the sector performances in the S&P 500, a big pie with a lot of green. In terms of the 11 sector groups, the only industry group that finished in the red, and that's just barely, is energy as oil prices fall for a 5th day. But really tech leading the way with the Infotech Index up 3%, the biggest section of the S&P 500, and that of course is led by Apple, communication services, and materials, each gaining at least 1% as well.
All right, off to the individual gainers I go. And check this out, guys. In a day where Apple, yes, did well, big earnings report, we watched it, we broke it down last night. The #1 gainer in the S&P 500 and the NASDAQ 100 is, drumroll please, is Amgen, which is kind of fascinating. Up almost 16% at its highs today, finishing the day with about just shy of a 12% gain, soaring up at the most in its intraday high, going all the way back to, I think it was 2009. The CEO coming out and saying he was very encouraged by early results from a study by the company's experimental obesity drug. What's interesting is we talked with our Madison Muller saying, I don't know that there was anything necessarily new in this news, but nonetheless, investors sat up and took note. All right, another one. Scarlett, you mentioned Apple. It was definitely among my big gainers of the day, up about 6%, finishing, though, off that 8% high earlier in the session. We know the stock jumping after the company posted stronger than expected sales last quarter, predicting a return to growth in the current period, so that sparked some optimism that maybe the slowdown at the company is easing. Revenue was down, we know, 4.3% in the March quarter, but it was better than what analysts were projecting in terms of the overall number. Profit topping, too, and then, of course, they had the biggest buyback that they announced in their history. So, again, an outperformer. Live Nation, another one.
Did you happen to see that Bloomberg story, Carol, where they showed the biggest buybacks of all time?
Yes.
And it was just Apple.
Well, it was so funny when we were talking about it with Anurag. He's like, listen, they always do a big buyback, but this was a really big buyback.
You know, Boeing's market cap, $110 billion.
Oh. Well, maybe they should buy. Oh, you're just
$110 billion.
Oh, so no Apple car, but maybe an Apple plane. Is that what you're saying, Tim?
Maybe. I don't know if you saw the Bloomberg opinion piece about Warren Buffett potentially buying Boeing.
Yeah,
Not saying it's going to happen, but, you know, among the most read
he has
on the
cash
Bloomberg
to
terminal.
do it, right?
He definitely has the cash to do it. Did I cut you off, Carol?
It's okay.
It's okay. It's okay.
Partner.
I'm sorry.
Live Nation, another one. #4 gainer in the S&P 500. This one up, just checking my Bloomberg, up about 7% here. The company reported first quarter results that beat expectations. These were all the earnings we were breaking down yesterday. All right, over to you.
Okay, speaking of earnings that we were breaking down yesterday, got to check in on shares of Expedia, because in terms of decliners, this one we got to talk about, falling 15.3%. Shares hitting their lowest level going back to November. The company did post disappointing first quarter bookings, also lowered its full year guidance. The company came out on the earnings call and blamed a slower than expected recovery in Vrbo, its vacation rental business, and saw slower than expected growth in the rest of its consumer business as well. Expedia CEO Peter Kern did say on the earnings call that Vrbo has lost share to Airbnb and to Booking Holdings, which is the parent company of Kayak and Priceline. Also, Carol mentioned Amgen move higher? Well, as a result of Amgen moving higher on the news that it has made progress on a potential weight loss drug, we saw shares of the GLP-1 makers Eli Lilly and Novo Nordisk move lower today. Lilly, the maker of Mounjaro and Zepbound, Novo, the maker of Wegovy and Ozempic. Shares of Eli Lilly closing down about 2.8% after Amgen's CEO said he was, quote, very encouraged by early results from a study of Maritide. And finally, Cloudflare, ticker NET, the cybersecurity company, fell as much as, wow, close to 18% today, finishing the day lower by 16. Yeah, is that 15 or 16, guys? Help me out here.
That's 15.
Look at that.
Almost, is it 16?
Yeah, isn't it?
This is why we got to get a return.
16.
You know, this is why we got to get a return monitor in here.
Or better glasses.
Or better glasses. Maybe that's what it is. Biggest fall since going back to just April of last year. The company did post second quarter revenue projections, fell short of analyst expectations. Analysts did say that a strong first quarter report was overshadowed by that weak forecast. Cloudflare, also, the other cybersecurity companies, they've faced headwinds in recent months as businesses have scaled back that spend when it does come to IT.
All right, let's go to yields here because they did stuff. Buying across the curve, we saw much more extreme buying once the jobs number came out at 8:30. Then the ISM services kind of tempered that buying a little bit, and you saw a little bit more buying kind of in the belly of the curve. But weekly, guys, it was pretty tremendous. The 2-year yield is down at one point as much as 28 basis points. The 10-year down 21 basis points. This is at the max of the move lower in yields. And the 2-year yield kind of just cratered below its 50-day and 200-day moving average. So there's just some technical levels that were hit. That's why I keep mentioning positioning. And I do wonder what's going to be the next catalyst for yield. So I was like a month out early for NVIDIA, but like there's nothing happening next week in terms of economic data, for example.
You know, I feel like we need to give a shout out to the yen as well, given the monster moves in that currency pair, especially dollar yen. For the week, dollar losing 3.4% versus the Japanese currency. We haven't gotten any confirmation that the finance ministry is behind any yen support, but presumably what else could have driven the yen to such extreme moves over the last couple of days?
Yeah, I mean, 152, I mean, quite remarkable here. And we talk about the catalyst for next week. We do get some earnings out of Disney and a few other kind of second-tier companies, but I'm going to use this as a shameless plug for our coverage that Carol and I will have at the Milken Conference. We'll have a big conversation over the next 3 days, Monday, Tuesday, and Wednesday, with a lot of the biggest asset managers, a lot of folks in the private equity and private capital space. You see a couple of big names up there, including Katie Koch over at TCW, Ray McGuire over at Lazard, and Ann Walsh, Carol, over at Guggenheim.
Yeah, listen, this is a great place it's everybody and anybody, certainly in the financial sector. And there's more players in certainly traditional business, but you get a good gut check about what's top of mind for folks who are managing so much money globally. And especially at a time when there are so many questions and big macro issues, whether it's geopolitics, artificial intelligence, you do wonder what's top of mind. And even like you look at the volatility we see in the bond market, Scarlett, as we are data dependent, moving from data point to data point. Curious to see what really kind of tracks with them in terms of what they're focusing on to make those investment decisions.
One thing, of course, that we should note is that the event will be in West LA, which is fairly close to the UCLA campus. I'm curious whether college students and their alleged outside agitators might hold demonstrations here in the Beverly Hilton. It's one thing to protest on campus, calling for your school's endowment to disclose and divest, but some of the fund managers who are investing the school's money will be attending the conference.
And
you know?
yeah, that's
They're the ones directing the investments.
I mean, I was there in 2021 and 2022, and there were protests taking place, and it was. I would think it was fair to say it was a calmer environment across the country at that point.
I sort of chuckled because, and I think we were there that same year. They had those protests, but I chuckled because they made sure they could have kept them on. I can't remember what that one street is. So they kept them on that one side there and away from the main entrances. So yeah, as you know, security is tight. But yeah, I agree with Scarlett. I'm sure some of those people might feel the need to stop on by.
So it's on you guys though, Carol, Romaine. You guys got to make the news next week.
All right, pressure.
Okay, so or else if nothing happens, it's on you guys.
Well, thanks a lot. Okay. All right, guys, listen, have a great weekend. That's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, we call it Beyond the Bell. Join us, though, for all our special coverage next week, and have a great weekend, everybody.
This is is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week, and you heard Carol in the last few minutes say, wow, what a week. It kind of felt like it was 3 weeks. Here's just a little bit of what happened. Wednesday, a message from Fed Chair Jay Powell that the central bank's next move is unlikely to be an interest rate hike. Then you go to today, you get that softer than expected payroll report. It gives some indication that the Fed could start cutting rates as early as September. Saw a little bit of a rates reset, I think it's fair to say, as a result of that. Then earnings season, just in full gear, Carol. We got results from heavyweights Amazon and Apple also this week.
All right, so that is the backdrop for Wall Street Week with David Weston on Bloomberg TV and Bloomberg Radio. Coming your way at 6 p.m. Wall Street time. David is in the house with us. Great to have you here. Can we go to one thing that Tim and I just talked about on air, is your conversation with Larry Summers about what's been going on on campuses across the country.
Oh, yeah. Larry came, obviously, to talk about the jobs numbers.
No, I know,
to talk a little about the yen you were talking about before. But he said he really wanted to address the college campuses. And particularly, it was almost sad. He said he has never, I think the phrase was, he's never been as appalled with Harvard. Which is his alum. He's an alum of Harvard. Yeah. He was president of Harvard. He's on the faculty of Harvard. He basically said it's craven the way they're handling the situation on campus. He particularly was offended, interestingly, by the flag, the Palestinian flag that is now draped from the statue of John Harvard, as well as putting a keffiyeh on him. He just said, I don't understand why that has to go forward. He was very upset about it. He thinks they're making a big mistake. And he actually tied it into geopolitics. Yeah. He said, people around the world who are looking at us are not thinking better of us for this. Our adversaries around the world who do not wish us well are taking a look at this and saying, is this the next generation of leaders? So Larry feels pretty strongly about this one, I must say.
Yeah, I want to repeat what he said. It's pretty stark. He said, you can debate whether administrators should be sending in police, and I think that should always be a last resort, but they can't keep John Harvard adorned with Hamas-supporting symbols. It's appalling to me, he said.
Yeah, it's actually, we had an echo of that. I don't know if you noticed with our mayor here in New York City talking about the flag up at the College of New York, actually, saying they'd taken down the U.S. flag and put up a Palestinian flag. He said, you do not do that. He said his uncle died for this country in the military, and you just don't do that. So it's obviously it's a very divisive time, very difficult time.
Yeah, it's kind of crazy. Like we were all thinking about how did we go, get so far from where a college campus is supposed to be this place where you can share diversity of thought, have civilized conversations, but it just feels like we've gotten so far away from that, and I don't know how we get back.
I think a lot of critics would say the civilized conversations are not happening in the protests. I think a lot of critics would say.
We have to remember how old I am. I mean, I started at the University of Michigan in 1970. Yeah. And in the late 60s and the early 70s, there were a lot of demonstrations on campus at the University of Michigan and elsewhere. And it was about the war in Vietnam. A lot of strong feelings about that. It was also about racial issues. And they shut down the University of Michigan for a month or two in 1969 because of racial issues. So, and this is not to say it's okay or it's tolerable, but it's not like it's never happened before. Some versions of I think something that is different this time, it was not directed at a particular ethnic group. It wasn't directed at Jews or, for that matter, Arabs or anything else. But we have had college campuses really ignite over major political issues before.
Yeah, I was just going to ask you how you think this is different.
Well, the issue about Israel and being Jewish and targeting Jews as such, I think at least that is quite different. We did not have that before.
And I was talking to my wife about this with my wife about this recently, and we're saying, okay, well, graduation for a lot of these schools is coming up very soon, and you have to wonder if that is what actually ends this. Because if the students are on campus,
historically,
at least this time
people go home for the summer.
Yeah,
the students. In my experience, I don't mean to be cynical, but students are perfectly happy doing this in the spring. By the way,
that's what I'm saying.
I don't know if we'd have this if it were February. Yeah. I'm not sure we'd have the same demonstration.
That's a really good point, David.
From my experience. But what happens is they go home for the summer. They go off to their summer jobs or whatever. That's what ends it as a practical matter.
All right, no easy segue. So tell us about your conversation with Josh Easterly.
Yeah, that's a big segue.
Sorry.
Well, Josh Easterly, of course, is the co-president co-CIO of Sixth Street, which is a very big asset management company of people who came out of Goldman, actually. And a lot of what we talked about was private credit. But something that they have gotten involved in is sports. As you know, they've got a part owner in the San Antonio Spurs. They've got a deal with Jerry Jones on some things. They've got a women's soccer team out in the Bay Area in San Francisco. So we asked him specifically about why sports? Why is this a good investment? This is part of what he had to say about why he thinks it's a good investment.
The fundamentals of sports is great. It's recession-proof. Content's super valuable in a day and age where there's streaming, and so live content's super valuable. And what Sixth Street really does is we finance the ecosystem. Think about COVID. Take a step back and think about COVID for a second. The government supported a whole bunch of small businesses. The one sector they did not support was live sports. And so in that moment in time, there was a need for capital, and that capital still exists. I think sports owners want to make the product better for the fans.
So that's Josh Easterly of Sixth Street. And you heard him say the ecosystem.
Yeah.
So they do invest in some teams, but also they've invested, for example, in Real Madrid. They didn't invest in the team. They invested in the stadium and some of the revenues that come out of the stadium. They have an investment interest in that. They've also invested in some European soccer television rights.
I was going to say media is such a big part of the ecosystem.
Exactly. And by the way, this is very timely right now with Churchill Downs and the Kentucky Derby tomorrow coming up, because if you notice this piece about Churchill Downs, they've gotten to be a big enterprise, a big business enterprise, apart from running a horse race once a year.
It's phenomenal, the amount of money that's been going into sports, and I get it. And it's kind of one of those things that's still destination viewing, like you think about a time, right, when there's some event. So it's fascinating. Are there certain, I mean, like you said, it's the infrastructure he's interested in. He's not interested in necessarily in owning the teams and things like that.
Yeah, you see, it's a business for him. It's a asset class. And I think this is the thing that I'm just catching up with now. I used to think of sports teams as being something that were basically ego plays by very rich people. Men typically, but very rich ego players. Now it's an asset class.
Yeah.
I mean, it's a serious asset class. And there's more and more pressure now.
Incredible returns, or can be.
There can be incredible returns and a lot of pressure on places like Roger Goodell and the NFL to let, for example, sovereign wealth funds invest. You know, they want to do it, and right now, Roger said, no way, no how. We'll see.
For now.
I mean, look what's going on with the PGA and Live Golf.
Exactly.
Well, exactly right. Exactly right. There's a lot of money out there.
You talk about this all the time, Carol, the idea that supply, you know, it's such a fixed supply when it comes to pro sports. And every time we see a team sold, it's basically a new record.
Yeah, the other thing that strikes me is you're always looking for a sticky business, sort of with a moat around it. These sports teams are very sticky. Most fans get to be pretty loyal, and they keep coming back again and again and again. So it makes a lot of sense. And obviously, Sixth Street's not the only one. Carlyle is raising a fund. Blackstone's been invested for some time. So there's a lot of different asset managers who are really taking a hard look at this.
David Rubenstein about the baseball.
Yeah, exactly. Baltimore Orioles.
Very excited.
Hey, David, before we let you go, thinking to next week, I know you're headed to the Milken Institute Global Conference this year. What's top of mind for you going in?
Well, I'm going to be curious because I've never been, so it'll be an adventure for me. We're going to talk with Mark Rowan. We're going to have an extended conversation with Mark Rowan. We will talk to him about private markets because he really thinks private markets are the way to go and that we've only been seeing the beginning of it. But we'll also talk to him about college campuses because he's been very outspoken, as you know, at Penn about what's happened and where we're going with the universities. It's very challenging. We'll also have a panel where we'll have Carneal Tambor, who's the co-CIO of Bridgewater, as well as the CIO from Temasek. And the subject of that panel is going to be a fracturing world and what that means for investors. We're moving away from the multilateral world where there was sort of basically agreement on how we did things. Those days seem to be gone. So what does that mean for a portfolio, for some of these very big portfolios? Among other things, it's going to be interesting. A lot of good people out there, an awful lot of good people.
Yeah.
Showing
Conference.
It's a
hey,
lot.
Don't have too much fun without us, okay?
Yeah.
Come on, guys.
I'm going to the Ivy on the shore. That's what I'm doing.
Okay. David, thank you so much. Bloomberg News anchor David Weston. Catch Bloomberg Wall Street Week tonight at 6 p.m. Wall Street time on radio and television. Coming up next, we're checking in with Nate Checketts of Roan. That's coming up.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all finishing in the green today. Jobs Friday, S&P up 63, heading into the weekend at 51.27 on the S&P. That was an advance today of 1.3%. Dow Industrials up 450, up 1.2%. The NASDAQ Composite Index up 315, up by 2%. 10-year 4.49% with a 2-year 4.80%. Gold down $1.71 the ounce to $23.02, lower by 0.1%. West Texas Intermediate crude down 1.1%, $78.08 a barrel on WTI. Big day for Bitcoin, up 6.4%, now at 62,493 on Bitcoin. A 6% move today for Apple after earnings. The company posted stronger than expected sales last quarter, and it predicted a return to growth in the current period, sparking optimism that a slowdown is easing. Again, recapping, stocks higher with the Dow, the S&P, NASDAQ all advancing today. S&P up by 1.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You looking good. Wow, so good. Look here.
All right, everybody, it is official. Rhone, known for its apparel line for men. It's been around since 2014 now. Backed by Blackstone executive David Blitzer, former hedge fund manager Gabe Plotkin, and ex-football star Tim Tebow, and more. And now some might finally say, I will say, finally out with the women's line. The line went live online for early access yesterday, fully launching next week. Back with us, someone well known to our audience. He's been joining us since the very beginning. Nate Checketts, co-founder and CEO of Rhone, right here in our Bloomberg Interactive Broker studio. It does feel like family. We've been watching you on this ride. First of all, how are you?
I'm doing great. I mean, I feel like, Carol, you manifested this because the first interview, you were like, okay, so when are you going to do women's?
Because it was such great stuff.
Yeah, no, we are so excited.
I wear your men's shirts.
We are so excited to bring this to the market, and the initial reaction's been unbelievable. So
why so long? Wait, I just got to ask you, why so long? Sorry.
Well, we did a capsule collection back in 2019 on International Women's Day,
Right.
and the thought was, okay, this will be a little test. We'll see how the market reacts to it. And it went well. And then, of course, we have a global pandemic the next year, so we decided not to anniversary it.
Yeah.
We pulled back. And then really, we made the decision 2.5 years ago, okay, we need to do this, but let's do it the right way. Let's think through every aspect. And it impacts everything from store layout to mannequins to models to the brand marketing. How are you shifting the message? So we really brought in best-in-class talent across every aspect of the business, and starting most importantly with the product. And it just takes a while to do it right.
Is it hard from a communications perspective because you've been known for a decade as being a place for men, and perhaps customers might walk by a store and say, well, I'm not going to go in there because they don't have product necessarily for me?
Yeah, I think that has been the brand marketing challenge. And I think if you look at the industry, there are certainly brands who have done this very well, shifted from men's to women's or women's into men's. But then there have been brands who have taken some big missteps in that. Mm-hmm. And one of the things that we were adamant about from the beginning is this is not taking our men's product and creating women's product. This is taking our customer, putting her at the center of the journey, and making product uniquely for her, unique fabrications, unique fits, unique cuts, and that it can be, the lines can be complementary, but they're not meant to be, symmetrical.
How is it more difficult in terms of creating a women's line versus a men's line?
There's certainly a lot more competition.
Yeah.
And I think there's more pressure to have newness and be on trend and fashion. We joke in the men's space, it's like, well, make sure you have black, navy, and gray, and you're fine. But even the men's space has evolved over the last several years, and men are more kind of fashion forward and leaning into trend and style. So we brought in really a best-in-class team on the merchandising and the styling and the design side, and we're really seeing it on the initial reaction. We launched an early access yesterday, and in the first day, we started breaking on a couple of styles, meaning we were selling out of a few key sizes, which we had not anticipated to happen for the first 4 weeks. So the reaction has been just unbelievable.
What's the ultimate goal for revenue mix for this? Do you want this to be 50-50? Do you want women to be 60-40?
No, we've done a 3-year model, and we see a path to getting the brand to a 50-50 mix. Women are obviously more prolific shoppers than men. They're just better at it. They know.
Stop that! I hear that at home.
they know what they want, and they're willing to lean in and try new things. I think the challenge is if you can get a male customer, you can keep him generally a lot longer. He tends to go back to what he knows and likes. He's harder to get.
That's men are lazy.
Yep. That's a good interpretation.
Well,
we know what we like.
You tend to
like
what you like.
Exactly.
Right?
But women, you have to earn that. You have to earn that next purchase every single time, and we take that seriously. So, to us, it starts at the fabric level, the quality of what we do, and I think as we put hands, everything from our fit model to our actual fashion models, they've said, they work with every brand in the market, and they're like, this is the softest, best fabric I've ever felt. So we think we're doing something right.
How do you go after getting the female customer, women customers versus men? Like, I'm curious, what was your approach?
Well, we have a slight advantage here versus a new brand, which is we already have a big database of women. 30% of our men's product was being purchased by women, which is about the inverse of some of the big public, more female-led brands.
Right.
It's usually like the opposite of that, but we had a database of active female shoppers, and then we've just been very strategic about going out, targeting who we think she is, on social, building up some anticipation, some great PR. We've had a lot of incredible press. And, this is not a 1 month thing. This is we've learned in 10 years, you've got to keep consistent.
No shortage of this type of apparel for women out there.
No.
I mean, it's weird to say the OG, it's not really even Lululemon, but you have Lululemon, you have Athleta, you have Viore out there. Yep. How do you differentiate? How do you make this distinct? How do you build this brand from the ground up?
I think one of the things that we have really prided ourselves on as we built this line is almost every active brand is based on the West Coast. And there is definitely a West Coast aesthetic. And what I've said internally is, since when was New York not the fashion capital of the world? So we try and bring a New York aesthetic and trend and focus into active. But we start with a root of performance at the center of what we do versus taking kind of a ready-to-wear and then trying to use active fabrics. We combine the best of both worlds to kind of bring that to the market. And I think the other big focus for us is how do we make her, powerful, strong, independent? We think a lot of these brands look the same because it's all yoga, endless hours of yoga loops, but we think our customer is, maybe she's sneaking yoga in 15, 20 minutes, and she's working hard, she's taking care of people, she's strong, she's independent, and we want to position her that way versus, you've got 2 hours in a yoga studio to do whatever you want, because none of our customers live that way.
Well, it's interesting because as someone who's done yoga for a lot of years, I mean, there are yoga clothes, but they look like yoga clothes. I'm not dissing them or anything. Love them. They're really comfortable. But there's a professionality. Is that a professionalism? I guess. Sorry, making up words as I go. But a professional aspect to the things that you guys do that look. It's just different.
Yeah, we think about it as the difference of athleisure is obviously a term that has gained a lot of importance in the market.
But I almost think you're...
Yeah, the way we think about athleisure is it's made to look athletic, but you can't actually work out in it.
Yeah.
So we call it performance lifestyle, which is you can do anything in our clothes. I've run a marathon in our dress shirt. You can literally do anything, but you're going to look professional when you wear it.
Is that the same when it comes to the women's line? I mean, the more active formal line that you that you developed for men's came a little later than that first activewear stuff. Are you following a similar timeline, or are you going to kind of release everything right now?
No, we're following a very similar flow, which is let's root ourselves in performance. So the initial line you'll see is very active, focused, a lot of course to court. You may have heard we signed the LPGA as we're the official on-course apparel partner there. So you'll see us on a lot of green grass accounts, tennis courts, pickleball courts, and then a lot of the lifestyle will start to be added in afterwards.
So can we assume at some point, and I know we've got more time to come back, but suits, like a suit that is kind of the casual, but...
Do it for men.
Yeah, you'll see in some of the marketing, there's a lot of really exciting stuff that I think the professional woman will feel very comfortable wearing into the workplace.
Do you still have fun doing this?
Oh my gosh, I'm having the most fun I've ever had right now. It's 10 years, and certainly I've had periods of founder burnout, but I think since we took back full control of the business and we really kind of started to chart our own destiny, it just changed the way we feel about it.
You took back full control 18 months ago, roughly.
Yep.
Didn't make it public, though, until just last fall.
Yeah.
Give us an update on the business since taking full control.
Well, last year was our biggest absolute growth year ever, and the business is growing almost twice as fast this year.
Yeah.
So we feel really encouraged about that decision and the team that we've put into place and the investment in people. And, we have big growth goals, so we still feel like we're in the early innings of where this can go, but it's been a journey, 10 years.
All right. Well, don't go anywhere because we want to know about the next 10 years and these big growth goals, excuse me, if you will. I mean, here we are, like you're rolling out one new thing. I'm like, okay, what's next? We're going to come back with Nate Checketts. He's co-founder and CEO of Roan, joining us here in our Bloomberg Interactive Broker Studio, as we said, launching women's line. So we're going to talk a little bit more about that and what's next.
Hey, we saw a rally today in equity markets. The Dow finished higher by 1.2%, the S&P by 1.3%, the NASDAQ composite by a full 2%. A lot of that had to do with the rates reset that we saw in the wake of a softer than expected jobs number that came this morning. But Carol, we still have earnings going next week.
Yeah, earnings going on, and it'll be interesting to see economic data points and whether it changes anything when it comes to the yield curve. That 10-year note yielding 4.49, 2-year note, which was most sensitive to Fed policy, coming in below 5 at 4.8.
Hey, more with Nate Checketts of Roan in just a minute. First up, though, check the latest world and national news. Amy Morris in the Bloomberg 99.1 Newsroom in D.C. Hey, Amy.
Hi, Tim. Democratic Representative Henry Cuellar of Texas and his wife has been taken into custody on money laundering, conspiracy, and bribery charges. An indictment was unsealed today accusing Cuellar and his wife of accepting nearly $600,000 in bribes from an Azerbaijan-controlled energy company and a bank in Mexico in exchange for advancing their interests in the U.S. Cuellar said in a statement that he and his wife are, quote, innocent of those allegations. Former President Donald Trump's criminal hush money trial has wrapped up for the week after former Trump advisor Hope Hicks took the witness stand. Now, Hicks broke down during cross-examination when the prosecution asked her about her time at the Trump Organization. And just before they adjourned for the week, the judge denied a prosecution request allowing prosecutors to ask Trump on the stand about the gag order violations that assume Trump does testify at some point. Police moved in to clear an encampment at New York University today at the request of school officials, a move that follows weeks of pro-Palestinian protests at college campuses across the country that have resulted in nearly 2,200 arrests. One student says some police went too far.
Chaotic. It was too much. It was aggressive. It was overly aggressive.
NYPD trying to clear those protests at the new school in Manhattan following the crackdown at Columbia University this week. And an experimental F-16 fighter jet has taken Air Force Secretary Frank Kendall on a history-making flight controlled by artificial intelligence, not a human pilot. Kendall said he came out of the flight confident enough in AI's capabilities that he would trust it to fire weapons. Well, the military is planning to use the technology to operate an unmanned fleet of 1,000 aircraft. This worries arms control experts and humanitarian groups who want greater restrictions on its use. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. It was an up day and an up week as well. 2 in a row, by the way, for the S&P 500 index on the week, up by about 0.5%. The Dow today up 450. That's a gain of 1.2%. S&P finishing the week at 5127, up 63, a gain there of 1.3%. NASDAQ up 315, a gain there of 2%. Stocks had their biggest advance since February as a slowdown in U.S. jobs sent bond yields tumbling, with traders reviving bets on Fed rate cuts this year. 10-year 4.49%, the 2-year yield 4.80%, I should say, on the 2-year. So we had gold today also moving lower. We had gold down 0.1%, 23.01. West Texas Intermediate crude oil down 1.2%, 78 even a barrel. So it was an update, but what is on the minds of investors? Amy Magnotta is co-CIO at Athegenos Capital, and she was a guest right here on Bloomberg Business Week.
I think investors are concerned about rates and what that means for their fixed income portfolios, and also just, given the strong run in equity markets, we always get, kind of, is this the top? And then as we get a little bit closer, a few months from now, I'm sure we'll be getting a lot of questions on the election and what that might mean for markets.
Apple shares up 6% after the company posted stronger than expected sales last quarter and predicted a return to growth in the current period. Again, recapping, the 2-year yield 4.80%, with the S&P up 63, a gain of 1.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. We're talking with Nate Checketts, co-founder and CEO of Roan, still in studio with us. So expanding into women, you still talk about growth going forward. 10 years in, what's the next 10 years? Like, how do you think about it?
Yeah, well...
Sorry, no pressure.
I think the thing that I am most excited about is we have, from the beginning of our customer journey, we have focused on what we call mental fitness, which is really just an emphasis on mental health, taking care of yourself both physically and mentally. When we came into the active market, you would see all of these marketing messages of, you're an athlete, lift more weight, run faster, jump higher. And we think there's such a missing aspect of recovery and taking care of yourself in the space between your ears. And that is a very unique problem in the men's market. So it was an easy area to focus on. But everybody needs to talk about this. And what's great is the female customer is already naturally so much better at talking about it. So doing this together with our team has been really, really helpful and powerful. So what I'm most excited about for the next 10 years is to be able to supercharge that. And so we've got some big, exciting plans in terms of how we're going to do that, how we're going to bring that to the market, and some of the unique things that we think about being a wellness company first that just happens to sell clothes.
Wow.
Was that in your ethos from the very beginning, or did that happen? Did that kind of transition happen over the pandemic? And you've spoken to us recently at length about the challenges that the company faced, that you guys faced during the pandemic.
Yeah, it has been part of the DNA from the beginning. I think during the pandemic, we were able to crystallize what that mission was. And part of it was having my own, crisis going through some of that with the pandemic. But we have always believed that wellness is much more than aesthetic, physical fitness, which is really where I think most of these brands focus on, with a hyper level of focus on professional athlete endorsements. We just love this idea that teaching people how to take care of themselves is the best way to feel good. And part of that is having a uniform that you feel excited and energized, but also enabling and empowering the conversation. We've hosted hundreds of these events that we call mind and muscle events, which are 25-minute body weight workouts followed by a group discussion, which is really like a group therapy conversation. And that format exists in Alcoholics Anonymous. It exists in a number of different formats, but it's been so successful in men's, and we've had groundbreaking moments with so many guys, and it just enables them to feel comfortable talking about these things. It's like it's my passion. It's the thing that gets me the most excited. And yes, I think we make the best clothes in our category and the best clothes in our market. That enables us to have a megaphone. And so we've got to grow the size of our megaphone to have the level of impact that we want. But our our growth goal is to be $1 billion revenue business and impact 100 million lives through our education.
It's fascinating to hear you say, like, thinking of yourself, I mean, like you said, it's from the beginning, but as a wellness company, kind of with clothes attached, if you will. I mean, how else do you, I mean, is it a case that there are other offerings, Nate, that you eventually offered to your customers even more so?
That's the goal. From the beginning, we had an online journal that we called The Pursuit, which focused a lot on this, bringing world-class experts to the table, sharing that content. But what we found is that this idea of, you guys are in the content business, you know how hard it is.
Yeah.
And so we were competing against advertised-driven content engines, and this was like something that we were doing on the side. So now we've taken that back in-house and figured out how to do this in a way that we think is sustainable and meeting the customer where they're at in the form of video content and social first content versus written content. And then also live events and doing, leaning more into that I think will be really powerful.
Can you give us an update on retail locations? Because one thing that we talked about with you last time you were here was growth of retail in a time when we're seeing other companies pull back.
Yeah.
And I'm wondering how aggressive you're being this year when it comes to that retail footprint, and what portion right now comes from e-commerce versus those brick and mortars.
Retail has been our fastest growing channel the last 2 years on a percent basis, and I think it's a channel we certainly believe in. We are slowing that down this year because of the women's launch. As you can imagine, it changes the layout of the store, the size of the store, the mannequins, the hangers, the training of the staff, the selection of the staff. Like, there's just so many considerations. So we kind of want to absorb and
because every store has to have a retrofit, right?
Exactly. So we're retrofitting all 15 stores.
Yeah.
We've kind of done that work, brought in the right people from a visual merchandising standpoint. But our store plan going forward is as aggressive as it was in 2023. And we think that these stores are really important, especially for our brand message, because you have to meet people where they are, and meeting people in person and physically. We've all learned the importance of that over the last several years. So we're leaning into that and doing it the right way. We're going to be highly selective. There are certainly a lot of brands in our space that, because of their capital stack and what they need to achieve, they're juicing their revenue numbers by opening as many stores as possible, and in some cases overpaying for real estate, which is going to be tough in 3 to 5 years when those rates, don't justify the sales figures. We're not taking that tactic. We're being really thoughtful, but we're gonna, our store count will be more than 2x by 2026.
Forgive me, and I should know this. Wholesale, you guys don't want.
We do have some wholesale.
Bit,
yeah,
right?
We've got some great partners in the market. We have a high focus on specialty accounts, green grass accounts. We're in some of the best golf and country clubs.
Productive for you guys, or is it just?
Absolutely.
Yeah.
I think it's a great business model. You can get carried away when your wholesale account is driven by majors. For us, it's been about 20% of the business the last 2 years, so it's small.
Equinox was an early partner.
Equinox was an early partner,
That's...
still a partner, and we love that type of account, because generally if you walk into an Equinox and you buy shorts, it's because you forgot shorts. Nobody's like, hey, you know what, I'm going to go have that be my retail experience, or I would say that's the minority. But
you just do it.
It's perfect, and it's a great way for people to discover the brand and the product.
You don't want to use the gym loaner shorts.
All right, so here I go, Nate. Kids?
Yeah, I won't say never. My wife's been begging for that from the beginning, but I think she'll give me a minute, because
sorry.
Wait, just to clarify, you have kids already. You're talking about a kids line.
Yeah.
Kids line.
Kids line.
Okay.
Yeah, fair. Thanks, Tim.
Yeah, no problem.
But yeah, so you never know. But I surprised my wife on the day that we launched, and I had just flown in from Asia. I arrived at 3 a.m. and I set up a room in our house with every single one of the products for her, and then I brought her in and surprised her. And so I think she'll give me a year off before bothering me about kids again.
Well done, well done.
Thank you.
Nate, always great to check in with you. Good luck with it.
Thank you.
We
Great
look
seeing
forward
you
to
guys.
hearing more.
Thanks for having me.
Always. Nate Checketts, he's co-founder and CEO of Roan, joining us here in studio. All right, everybody, you've been listening and watching Bloomberg Business Week. Carol Massar, Tim Stenovic, and this is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Paramount Global shares down 7% today following a Variety report that said there is an expectation among insiders at the company that the two deals it has been linked to will not ultimately proceed. DraftKings has raised its annual sales target for sales and profit as the online betting giant sees continued growth in customers and betting revenue. CEO Jason Robbins spoke about the outlook this morning with Bloomberg Television.
Well, I think there's a lot of upside remaining throughout the year. We have a number of different initiatives underway, and also customer acquisition keeps outperforming what we expect. So really, I think the trend is good right now, and a lot of the initiatives we have planned for the back half of the year will be rolling out with the start of football season. So I think we'll know a lot more then, but definitely feel like we have some good stuff planned on the product front, and I definitely think there's some upside.
And today, we saw downside for DraftKings falling by 2.8%. Apple rallied today after the company posted stronger than expected sales last quarter and predicted a return to growth in the current period, sparking optimism that a slowdown is easing. Apple shares today up by 6%. The results did come as a relief to investors who've been waiting for the iPhone maker to pull out of a long slump. Amgen soared today up 11.8% after its CEO said he was very encouraged by early results from a study of the company's experimental obesity drug, Maritide. CEO Robert Bramway said, quote, "We recognize the significant interest in obesity. The Thousand Oaks, California-based company has emerged as a potential competitor to Lilly and Novo Nordisk." And again, shares of Amgen today rallied by 11.8%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week on this Friday afternoon. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. An indictment was unsealed today against Democratic Representative Henry Cuellar of Texas and his wife on conspiracy and bribery charges. The indictment says Cuellar and his wife accepted nearly $600,000 in bribes from an Azerbaijan-controlled energy company and a bank in Mexico in exchange for advancing their interests in the U.S. Cuellar said in a statement that he and his wife are innocent of the allegations. They have been taken into custody. Former Trump advisor Hope Hicks broke down on the witness stand during cross-examination during Donald Trump's criminal hush money trial. Bloomberg Law host June Grosso has more on the significance of Hicks on the stand.
She's different from the other witnesses who have testified before because she doesn't have the credibility, or shall we say morality problems that some of them had.
Bloomberg Law host June Grosso. Hicks gave extended testimony about efforts to deny the allegations of an affair with Stormy Daniels. Court now has adjourned for the week. CIA Director William Burns has arrived in Cairo for talks about the Gaza conflict. Truce talks in recent weeks have taken on a new urgency amid a looming Israeli ground invasion of Rafah. The deal calls for Israel's military to fall back to allow Gazans to head north and for more delivery of aid. American officials have publicly warned against an invasion, while Israel's Prime Minister Benjamin Netanyahu has said an invasion is coming with or without a truce deal. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right, Amy, thank you so much. We thought we were going to say goodbye to him, but we have one more thing we want to ask. Nate Checkitts is still with us, co-founder,
Here's what
CEO
happened. He was walking out and we're like, wait, we didn't talk about supply chain. You got to stay with us.
We just kind of a silly thing. Tell us about your supply chain. I mean, how is it? Is it difficult? Have you thought about bringing it into the U.S.?
It's much healthier than it's been over the last 4 years, and part of it is we're benefiting from the fact that some of the biggest players in the space have had some real struggles, slower growth, especially in 2023 and in 2024. So the best factories in the world are chasing capacity, and they're coming to emerging brands. So that's providing lots of opportunity around terms and suppliers and differentiation of country of origin. So there's a lot that's happening in the space right now, and it's a good time to be an emerging brand in the active space.
Where are you doing most of your manufacturing?
Vietnam is the top country, and it's great from a quality of sewing. But there's a lot of happening in Cambodia, Indonesia, a growing opportunity in Central America and the Caribbean Basin. The biggest challenge, of course, in a lot of these countries are the duties and taxes. And so just navigating that while also trying to produce the highest quality garment is the biggest challenge.
Interesting. Has it shifted much, Nate, like over the years in terms of where you guys manufacture?
It has.
Yeah.
When we started, there was, a lot of attraction to being in China, and, that's where a lot of the sewing talent and activewear was, a lot of the machinery, which people don't talk about. Getting into the U.S. from a manufacturing standpoint is not solely about cost. It is so much about quality. We don't have the technical sewing talent in the U.S., and we don't have the machinery in the U.S. to do things like bonding or 6-needle flat lock stitching that we've come to expect in the quality of our activewear. So that is starting to get better, but it's still a challenge.
Do you see yourself shifting and doing any nearshoring in the near future?
Absolutely. I think there's opportunities, and you're even seeing big factory ownership groups based in Asia buying up capacity in Central America, which will make it even easier because they will make the investments necessary.
Is that would be where the nearshoring would be?
Yes. Yeah. Central America is the most likely place.
Really fascinating. Now we can say goodbye.
Yeah, it's good. Thanks for keeping me. It's great talking.
You think
as
you're
always.
going to get away? No.
Yeah.
Nate Checketts, thank you so much. Again, co-founder, chief executive officer of Roan, joining us here in our interactive broker studio. If you missed any of it, be sure to check our podcast feed.